Welcome to Eric Dong Academy, the place where we share investment secrets, financial knowledge, and strategies to help you conquer success. If you're passionate about investing and want to learn from financial legends like Warren Buffett, today's video will definitely change the way you look at investing and help you make smarter decisions. Did you know that by mastering just 6 simple rules that Warren Buffett applies, you can completely change your financial destiny? Watch this video to discover the golden principles from the man known as the greatest investor of all time. Don't forget to subscribe to our channel, like this video, and click the bell icon so you never miss any of our content. And if you're truly determined to change your life, don't forget to comment, "I want success" below this video to show your commitment to your own success. Warren Buffett is one of the greatest investors in history. If you had invested $1,000 in his investment company from the very beginning, that money could now be worth over $30 million. Although such returns may seem unbelievable, the real question is, how did he achieve this? The answer lies in Buffett's ability to understand what most people don't, and his adherence to a few core principles that you can also apply in your daily life. Keep watching, because by the end of this video, you'll have mastered all of these golden rules. When hiring employees, Buffett looks for 3 qualities: intelligence, initiative, or energy, and integrity. If someone lacks integrity, the first 2 qualities can end up harming them. If you hire someone without ethics, you would prefer them to be lazy and dumb, rather than smart and energetic, but lacking integrity. Buffett also shares how investors often behave. They easily get caught up in bull markets and only look at the past. If they made money last year, they think they'll keep making money this year, so they continue borrowing and pushing prices up. But when the market drops, they immediately pull out because they no longer see the opportunity from the previous years. They just look at the past and don't care about the underlying business. Buffett also recounts how he once followed the cigar butt approach, meaning searching for cheap companies with little value left, but eventually realized that buying great companies at reasonable prices brings much higher profits. Nowadays, he only buys companies he thoroughly understands in terms of how they operate and their long-term economic factors. One of the biggest lessons he learned is that the real mistakes aren't the wrong decisions, but the opportunities he missed due to hesitation. He talks about major mistakes like passing up the opportunity to invest in Fannie Mae 20 years ago. This doesn't show up in financial reports, but he knows that his hesitation cost Berkshire at least $5 billion. Warren Buffett always says that in life, sometimes opportunities come only once, and if you don't seize them, you'll miss them forever. He never sells the companies he owns, no matter how high the price, unless there are major issues with management or changes in the company's economic fundamentals. He concludes that if you want to get rich, you need an intelligent investment strategy, patience, and the ability to spot big opportunities when they come. Don't let hesitation cause you to miss out on a chance that might never come again. The Investment Secrets of Warren Buffett, 6 rules sure to lead you to success. Warren Buffett, one of the most successful investors of all time, is not only known for his enormous wealth, but also for his simple, yet highly effective investment rules. Below are the 6 investment principles that Warren Buffett always follows, which have helped him build a solid financial empire. Invest in what you understand. Warren Buffett consistently advises, invest in what you understand, as one of the most crucial principles for achieving long-term investment success. This strategy is simple but highly effective in reducing risk and maximizing profit. Buffett believes that an investor needs to have a deep understanding of the business they invest in, not just from financial statements, but also from the fundamental aspects of the business model, how it operates, and the key factors that determine its success. This allows you to make more informed and confident investment decisions, as you can clearly understand the factors that influence the company's future growth. For example, Buffett once rejected investing in tech companies like Yahoo or Google in the early years because he didn't fully understand their business models. However, after gaining a better understanding of their operations, he chose to invest in Apple, seeing it as a company whose long-term value he understood well. Investing in what you understand helps not only minimize risk, but also keeps you confident in your decisions, since you know for certain that the company you're investing in has sustainable growth potential. Focus on areas where you have true knowledge and experience, and you'll have the chance to achieve substantial success in your investments. Choose companies with a sustainable competitive advantage. One of the key principles that Warren Buffett follows when investing is to choose companies that have a sustainable competitive advantage, or a moat. These are companies that can protect themselves from competitors and maintain a dominant position in their industry over the long term. This advantage could stem from factors like a strong brand, unique products or services, large economies of scale that reduce costs, or control over supply chains and distribution. For example, companies like Coca-Cola, Apple, and Google all possess very strong moats. Coca-Cola has a robust brand and global distribution network. Apple has a closed product ecosystem that consumers find hard to abandon. And Google dominates the tech industry with its search engine and irreplaceable online services. Buffett believes that companies with strong moats will continue to generate profit and stability even during volatile market conditions. Investing in these companies allows investors to reduce risk and achieve sustainable long-term returns. Rationality is more important than emotion. Warren Buffett emphasizes that one of the most important factors in successful investing is patience and decisiveness, and especially not letting emotions drive decisions. Financial markets are often volatile, with strong emotional swings from investors. When stock prices go up, many people become overly excited and make impulsive investments. Conversely, when the market falls, they panic and sell off. Buffett has shown that successful investing is not about reacting to emotions, but making rational decisions based on thorough analysis. He maintains his positions and invests for the long term, even during short-term market fluctuations. Investing is a long-term game, and only investors who remain patient and unaffected by emotional highs and lows can achieve lasting success. Therefore, a smart investor must learn to control their emotions, stay calm, and always make decisions based on careful research and strategy. Long-term investment. One of Warren Buffett's famous philosophies is, if you don't plan to own a stock for 10 years, don't even think about owning it for 10 minutes. This statement reflects one of his core principles, long-term investing. Buffett has always believed that to achieve sustainable success, investors must view investing as a long-term journey, not a short-term game. Buying stocks just to profit from short-term price movements is a risky and unstable strategy. Instead, he advises investors to look for companies with solid foundations and long-term growth potential and hold those stocks for the long term. Long-term investing not only helps you ride out short-term market volatility, but also creates an opportunity for profits from stocks to accumulate and grow over time. When you maintain your belief in the company you're investing in, track its growth over many years, you'll be rewarded for your patience and sound strategy. Look for value rather than short-term growth. Warren Buffett is always on the lookout for companies that have real value but are being undervalued by the market. He believes that short-term growth only offers temporary profits and is unsustainable, while investing in companies with true value will yield more stable and long-term returns. Buffett frequently seeks businesses with strong foundations, sustainable competitive advantages, and long-term growth potential. When the market undervalues or overlooks these companies, it presents an ideal investment opportunity. He believes that if a company has strong intrinsic value, its stock price will eventually be revalued by the market to reflect that true value. Instead of chasing hot growth stocks, which may be influenced by short-term factors, Buffett focuses on investing in businesses with sustainable value. By doing this, he can capitalize on market opportunities, buy low when the stock price is undervalued, and reap the rewards when the company's true value is recognized. This investment strategy helps reduce risk and yields substantial returns over the long term. Don't over-diversify. Warren Buffett always emphasizes that while diversification can help reduce risk, over-diversifying is not the best strategy to achieve high returns. Instead of spreading money across dozens or even hundreds of different stocks, Buffett believes that investing in a few outstanding companies will provide much better results. According to Buffett, a smart investor should focus on companies they understand well and have long-term growth potential. By selecting a few excellent companies, investors can dedicate more time and effort to studying and analyzing these companies, allowing them to make more informed and confident decisions when buying and holding stocks. Buffett has shared that an investor only needs a few quality companies to generate significant profits, rather than spreading capital across too many stocks. By focusing on good opportunities and holding them for the long term, investors can achieve higher returns than simply diversifying to minimize risk. By applying these principles, you're not only learning from one of the most successful investors of all time, but you're also setting yourself up to build a strong financial foundation. Start your investment journey today with the secrets Warren Buffett has shared. And that concludes our deep dive into Warren Buffett's top investment principles. As you can see, success in investing requires not just intelligence, but also patience, deep understanding, and making the right decisions at the right time. These principles will be your key to unlocking the door to financial success. If you found this content helpful, don't forget to subscribe to the channel, like this video, and click the bell to always stay updated with the latest insights. Leave a comment saying, "I want success," if you're truly determined to make a change and begin your financial journey today. Thank you for watching. I wish you a wonderful day, and I look forward to seeing you in our next videos at Eric Dong Academy.